CEO Carlos Tavares noted that the strong focus by employees on operational excellence and synergies execution led to achieving very strong H1 financial results.
The automotive world is in complete shock right now. Stellantis, the giant behind brands like Jeep, Dodge, Ram, and Chrysler, has just dropped a bombshell that's shaking the entire US auto industry to its core. Out of nowhere, Stellantis has launched massive price discounts across its lineup, something nobody saw coming, especially in a market where most automakers have been raising prices, not cutting them. This isn't just a few $100 off. We're talking about thousands of dollars slashed from popular models. Dealers are scrambling, competitors are panicking, and consumers can't believe their eyes. So what exactly is happening here? Stellantis seems to be making an aggressive move to regain control of the US market. After months of slow sales, rising inventory, and consumer frustration with sky-high prices, Stellantis just detonated a discount strategy that could completely reshape the American car market. Reports are flooding in from dealers nationwide. Ram trucks are being offered with rebates that haven't been seen in years. Jeep models like the Grand Cherokee and Wrangler are getting massive markdowns. And Dodge, they're practically daring people not to buy, with deep incentives on Chargers and Challengers before they disappear from production. Industry insiders say Stellantis is making this move because their inventory levels are ballooning. With electric vehicle demand cooling and consumers pushing back against high financing costs, Stellantis dealerships have been sitting on lots packed with unsold vehicles. The company's response? Slash prices hard and fast before the end of the year. This strategy isn't subtle. It's an open declaration of war against Ford, GM, and even Toyota. And the craziest part? Early signs show it's working. Dealerships that were quiet just weeks ago are suddenly seeing waves of customers. Shoppers who had written off buying a new vehicle in 2025 because of ridiculous markups are now rethinking their plans. Some Jeep dealers are reporting discounts of up to $10,000. Yes, you heard that right. $10,000 off on select trims. Ram's full-size trucks, which have been struggling to compete with Ford's F-150 and Chevy's Silverado, are now priced lower than they've been in years. This is sending shockwaves through the industry because other automakers simply can't afford to match those cuts without taking a financial hit. What's even more fascinating is that this move comes right after Stellantis executives admitted during their last earnings call that US sales were disappointing compared to Europe. The company's American brands, once known for raw power and loyal fan bases, have been losing ground to Toyota and Ford, especially in trucks and SUVs. Stellantis seems to have realized that the only way to fight back, at least in the short term, is by using the one thing that gets every buyer's attention: price. But this isn't just about selling cars, it's about survival. You see, Stellantis is sitting on a massive transition. They're phasing out some of their most iconic gas-powered vehicles to make way for electric versions. The Dodge Charger and Challenger as we know them are ending. The Ram lineup is preparing for electric variants. Jeep is going all in on EVs like the Recon and Wagoneer S. But the problem is, Americans aren't fully ready to make that leap. At least not yet. EV sales growth is slowing, and people are clinging to traditional gas engines longer than expected. Stellantis's big discount move could be their way of clearing the decks, selling off existing gas models fast before the next generation arrives. And here's where things get even more intense: the ripple effect across the entire US auto market. Ford, GM, and even Tesla are watching this situation closely. If Stellantis manages to boost sales and move inventory through these price cuts, it could trigger an industry-wide pricing war. Remember, Ford and GM have both been struggling with the same issue: too many vehicles and not enough buyers. If Stellantis starts stealing their customers by offering deep discounts, those companies might be forced to respond with their own incentives, and that's where the real chaos begins. For years, automakers have been relying on high sticker prices and limited supply to keep profits high. But now, the tables are turning. With rising interest rates, shrinking demand, and growing competition, companies like Stellantis are being forced to adapt. This could be the start of something much bigger: a return to the kind of price wars we haven't seen since before the pandemic. And if that happens, car buyers across America could finally see real relief after years of inflated prices and dealer markups. But there's also a dark side to this story. Analysts warn that these deep discounts could signal deeper trouble within Stellantis's North American operations. Some insiders believe the company is in damage control mode, trying to mask serious demand problems with short-term incentives. If that's true, These price cuts might not just be about moving inventory, they might be a desperate attempt to stabilize crumbling sales before investors start panicking. And here's the kicker. This strategy might backfire. Once customers see Stellantis offering such massive discounts, they might hold off buying in the future, expecting even more markdowns. That's the risk of cutting too deep. It can reset consumer expectations. And if other automakers don't join in, Stellantis could end up devaluing their own lineup faster than they can sell it. But for now, one thing's certain. The automotive landscape in the US has just been turned upside down overnight. Across dealership lots from Texas to Michigan, the scene is almost surreal. Buyers who were once priced out of the new car market are suddenly back in the game. Ram dealers are advertising record-breaking rebates plastered across windshields. Jeep lots are offering lease deals so low that some customers are double-checking to make sure they're real. It's not just the discounts, it's the urgency. Sales managers are telling customers this won't last long, fueling a buying frenzy that's starting to feel like the pre-pandemic rush all over again. But behind the excitement, there's a quiet tension in Detroit. Ford and GM executives are reportedly holding emergency meetings to assess Stellantis' move. Their biggest fear? That consumers will expect similar markdowns on F-150s, Silverados, and even EVs like the Ford Lightning or Chevy Blazer. And that could spell disaster for profit margins that are already razor-thin. Remember, Ford lost billions on its EV division this year. GM has slowed down its electric rollout because of weak demand and high costs. If Stellantis forces a price war, it could push these automakers into an even more difficult corner financially. What's interesting is that Stellantis might actually be in the best position to make this move. Thanks to its international footprint and strong profits in Europe and South America, the company can afford short-term pain in the US market. This global leverage gives Stellantis the freedom to act aggressively while others play defense. And it's not just about prices, it's about perception. By launching these discounts, Stellantis is trying to send a message. We're still here, and we're not backing down. Meanwhile, consumers are starting to notice something strange. Vehicles that were sitting on lots for months are suddenly disappearing. A Jeep Grand Cherokee that was listed at $52,000 last month might now be selling for under $45,000, and buyers are jumping at the chance. Even models like the Ram 1500, which face stiff competition from the Ford F-150, are flying off the lots thanks to unheard-of rebates. Some dealers are even reporting that customers are traveling hundreds of miles just to secure a discounted unit. But Stellantis' gamble isn't just about short-term sales. It's a test of how far American consumers can be pushed before they finally break from high prices. For nearly 3 years, car buyers have endured inflated costs, ridiculous dealer markups, and interest rates that make monthly payments feel impossible. This new pricing wave could finally be the reset everyone's been waiting for. If Stellantis succeeds, it might force the entire industry to rethink how they price vehicles moving forward. And here's where it gets even more strategic. Stellantis knows that electric vehicle growth has slowed dramatically in the US. Many consumers are still hesitant about EV range, charging infrastructure, and long-term reliability. So instead of doubling down on EV hype, Stellantis is going for the jugular, selling more gas-powered SUVs and trucks at unbeatable prices while competitors push expensive electric models. It's a bold play, and if it works, it could help Stellantis dominate a segment that others are abandoning too quickly. But make no mistake, this discount wave isn't charity. Stellantis has a long-term plan behind it. Every discounted sale helps them clear out existing stock to make room for next-gen hybrid and electric models. It's part of a larger transition strategy that's been quietly brewing behind the scenes. By the time rivals catch up, Stellantis could have repositioned itself with a stronger lineup, healthier inventory, and a customer base that trusts the brand again. Still, there's one question that everyone's asking. How long can Stellantis sustain these price cuts? With inflation still biting and interest rates high, even discounted vehicles require serious buyer commitment. If consumer confidence doesn't bounce back soon, Stellantis might have to double down with even more aggressive financing offers, or risk another sales slump in early 2026. And here's where things start to take a darker turn. Economists are warning that moves like this could signal deeper instability across the auto market. If one of the world's biggest automakers is resorting to fire sale pricing, it suggests that vehicle demand in the US is far weaker than the industry wants to admit. Analysts fear that these massive discounts could trigger a domino effect, forcing rivals to follow suit and eroding profitability across the board. The last time something like this happened was during the 2008 financial crisis, when automakers were slashing prices just to stay alive. But the difference this time is that the market looks very different. Consumers are burdened with record-high car loan debt. The average monthly payment for a new vehicle has soared past $750. Many Americans are underwater on their car loans, meaning they owe more than their vehicles are worth. Stellantis might be betting that these lower prices will bring some buyers back into balance. But it's also possible that they're trying to get ahead of an even bigger market correction that could hit the entire industry within months. And while this price war brews, something else is quietly shifting: dealer power. For years, dealers have been accused of exploiting supply shortages and inflating markups. Now, they're being forced to compete again, with Stellantis putting pressure on them to actually sell instead of just wait. Dealers who don't move inventory fast enough risk losing factory incentives and bonuses. This means for the first time in a long while, the customer actually has the upper hand. Buyers are walking into dealerships and realizing they finally have leverage again. Negotiations that used to be one-sided are suddenly swinging back toward the customer. Dealers are offering better trade-in values, throwing in free maintenance packages, and waiving hidden fees just to close deals. It's almost unbelievable. After years of seeing car prices climb to record highs, the tables have completely turned. And you can feel the panic building behind the scenes. The automakers that were once celebrating huge profits are now scrambling to figure out how to keep their margins from collapsing. Meanwhile, Stellantis' aggressive pricing move is creating ripple effects far beyond its own brands. Used car prices, which had been stubbornly high since 2021, are beginning to fall faster than anyone expected. When new cars suddenly become more affordable, used inventory loses its shine. Analysts are already reporting that used Ram trucks, Wranglers, and Durangos are dropping in value as new models become more attainable. That's bad news for used car dealers and for anyone who recently bought a vehicle at inflated prices, but great news for buyers who've been waiting patiently for the market to cool off. But let's not forget, this isn't just a business strategy, it's a psychological one. Stellantis understands that public sentiment toward automakers has shifted. Consumers are frustrated, even angry, after years of record profits and limited supply. The company's leadership knows that if they can position Stellantis as the brand that listens to the people, they can rebuild loyalty faster than any marketing campaign ever could. By cutting prices, they're not just selling cars, they're selling trust. They're showing consumers that someone in the industry is finally willing to break ranks and say, "You've paid enough." Of course, that's exactly what's making competitors nervous. Ford, GM, and Toyota have all built their 2025 sales forecasts around premium pricing strategies, fewer incentives, higher MSRPs, and a focus on profits per vehicle. Stellantis just threw a wrench into that entire formula. If this strategy gains traction, it could force other companies to either follow suit or risk watching their market share evaporate. It's a dangerous game, because once the race to the bottom starts, it's nearly impossible to stop. And while Stellantis is making headlines for its discounts, insiders say the company's leadership is playing a long game that goes far beyond short-term sales. Behind closed doors, Stellantis is gearing up for one of the most dramatic brand overhauls in modern automotive history. New electrified Ram trucks, Jeep hybrids, and next-gen Dodge muscle cars are all in the pipeline. But they can't launch any of that effectively until they move the old inventory. These massive discounts are like a controlled burn, clearing the old forest to make way for something new. But here's the part that has industry veterans really concerned. Stellantis might not be the only one preparing for a big reset. Some analysts believe this wave of price cuts could be the first sign that automakers are bracing for a larger market downturn. Consumer spending is slowing, loan defaults are creeping up, and auto loan delinquencies just hit their highest point in over a decade. Automakers might be seeing the storm before the rest of us do. and Stellantis could be trying to get ahead of it by slashing prices early, moving metal fast, and securing cash flow before things get worse. Meanwhile, the mood among consumers is shifting from frustration to opportunity. Social media is buzzing with people sharing screenshots of dealer listings, bragging about snagging deals that seemed impossible just months ago. Some even say this feels like the first real buyer's market since before the pandemic. People are driving hours, even flying across state lines to lock in these offers. For families who've been priced out of reliable transportation for years, Stellantis' move feels like a long overdue break. But industry insiders are warning, this might not last. The automaker could be testing the waters, gauging how much volume it can move before scaling back. If sales spike too quickly, Stellantis could tighten incentives again to protect profit margins. That's why many experts are saying, if you're in the market for a car, this is your moment. Nobody knows how long this window will stay open, but one thing's clear. It's changing buyer behavior in real time. Still, one question hangs over all of this. Is Stellantis' move the start of a full-blown pricing revolution, or just a desperate short-term fix? Because if it's the latter, and they can't sustain the momentum, it could trigger financial consequences far greater than anyone realizes. Deep discounts might move cars, but they also cut into the very foundation that funds research, development, and innovation. The company might be winning the sales battle right now, but could it be sacrificing long-term stability to do it? That's the gamble. And that's what makes this story so explosive. It's not just about numbers on a price tag. It's about a global automaker risking it all to rewrite the rules of the industry in a market that's never been more unpredictable. Competitors are anxious, dealers are adapting, and buyers are suddenly in control. The entire system that's kept car prices sky-high for years might finally be cracking open, and Stellantis is the one swinging the hammer. Behind the scenes, the tension is escalating fast. Auto analysts are calling this the Stellantis shockwave, and for good reason. The company's pricing decisions are rippling through every level of the industry. Suppliers are starting to worry that the lower prices could eventually squeeze their margins. Banks that finance auto loans are growing cautious, watching closely as resale values begin to drop. Even Wall Street is taking notice, with investors debating whether this bold pricing move is genius or a ticking time bomb. Because when one major player suddenly undercuts everyone else, it forces an entire ecosystem to react. And not everyone is built to survive the fallout. And while Stellantis' numbers are starting to climb in showrooms, the mood at Ford and GM headquarters is far less confident. Reports suggest that both automakers are quietly pressuring their dealers to stay disciplined, corporate speak for don't start cutting prices yet. But the truth is, they may not have a choice for long. Consumers are now comparing prices across brands, and when they see that a Ram 1500 or Jeep Grand Cherokee costs thousands less than an equivalent Ford or Chevy, loyalty starts to crumble. That's the danger Stellantis just unleashed. Brand loyalty can vanish overnight when the price gap gets too wide. The irony is that just a year ago, Stellantis was under fire for being too slow to electrify, too behind on innovation, and too dependent on old-school models. Now, that same conservative approach might be giving them the upper hand. While Ford and GM poured billions into electric vehicles that still aren't selling as expected, Stellantis doubled down on what American buyers still want: affordable, powerful gas vehicles. And now, by cutting prices, they're proving that sometimes sticking to the basics wins the war. But this isn't just a battle of prices, it's a battle of strategy. Stellantis is rewriting the rules of how automakers measure success. Instead of focusing on per-unit profit, they're chasing total market dominance. Instead of hoarding inventory, they're moving it aggressively. It's a playbook straight out of the retail world. Flood the market, capture customers, and then lock them into your ecosystem with service contracts, accessories, and brand loyalty programs. It's ruthless, it's bold, and it's working. Meanwhile, consumers who were once skeptical of Stellantis brands are taking a second look. For years, Ram, Jeep, and Dodge were criticized for high prices and aging designs. But now, when those same vehicles are offered for thousands less than comparable models, perceptions start to shift fast. A family that once planned to buy a Toyota Highlander might now be walking out with a Jeep Grand Cherokee instead. A contractor who swore by Ford trucks might now be parking a new Ram in his driveway because the deal was just too good to ignore. And that's exactly what Stellantis is counting on, converting disillusioned customers from rival brands. They know once someone buys into their lineup and experiences their newer tech, improved interiors, and warranty support, the odds of them staying loyal rise dramatically. It's not just a short-term price war, it's a long-term recruitment drive. Stellantis isn't just selling cars right now. They're rebuilding their American fan base, one discount at a time. But while all of this sounds great for buyers and dealers, economists are starting to sound alarm bells. Because if this aggressive pricing continues, it could deflate the perceived value of vehicles across the market. Cars that were once considered premium could suddenly lose their resale appeal. Leasing companies might take a hit as residual values plummet. And if the entire market's pricing structure resets, automakers could face years of profit recovery ahead. Stellantis might be sparking short-term excitement, but they could also be accelerating a painful long-term correction. And still, in the middle of all this chaos, there's one question automakers are whispering in every boardroom. What happens next? Because if Stellantis proves that deep discounts can reignite sales without destroying their bottom line, the rest of the industry won't have a choice but to follow. And once they do, there's no turning back. The era of overpriced vehicles and record profits might be coming to an end faster than anyone expected. So what we're witnessing right now isn't just a few temporary discounts. It's a seismic shift in the entire US auto market. Stellantis has thrown down the gauntlet, and now every major automaker is being forced to make a choice. Either match these prices and risk their profits, or hold firm and watch their customers walk away. This could very well mark the beginning of a new era, one where consumers finally regain control after years of sky-high prices, endless markups, and corporate greed. Whether Stellantis' gamble turns out to be a masterstroke or a meltdown remains to be seen. But one thing's for sure. They've started a fire that can't easily be put out. The discounts are real, the competition is fierce, and the pressure is on. The question now is, who's next? Will Ford, GM, or Toyota follow suit? Or will Stellantis stand alone as the disruptor that forced an entire industry to wake up? One thing's certain, this story is far from over. We're going to keep a close eye on how this unfolds and what it means for car buyers across America. Because if prices keep dropping, we could be on the verge of the biggest auto market shakeup in decades. Thanks for watching. If you found this update insightful, don't forget to hit that like button, subscribe for more breaking automotive news, and turn on notifications so you never miss what's really happening behind the scenes in the car industry. Until next time, stay sharp, stay informed, and buckle up, because the road ahead just got a lot more unpredictable.